Good afternoon and welcome to Muck on the Markets. You'll notice that I am not shown on this video because I haven't taken a shower yet today. But I do have the prince of the show, Muck, who is going to give you his pearls of wisdom. Interesting day in the markets today, Muck. What do you think?
It's been a bad day for me in the markets. I think if people follow my Twitter handle, I'm pretty heavily long oil refiners, and not so nice of a day for me.
Wait, Muck. I am having so much trouble hearing you. You're long oil?
Yeah, long Exxon and long EOG and Continental Resources.
Okay. Well, just go slow here because your feed is coming back so raunchy to me, and I can only assume it's hitting the audience the same way. So just talk slow. I know you're a fast thinker. So you're long Exxon, EOG, and what other equity?
Continental Resources.
Okay. What's your theory?
My theory is eventually, if you see the rigs, we're shutting down rigs. Eventually, the Saudis are going to win and get what they want, which is Balkans and U.S. shale production, to dwindle. And once the Saudis feel like they've kind of won, I can see them cutting back their crude for a while.
The Saudis cutting back their crude.
Yeah.
That's interesting. That's the first time I've heard that. I mean, I don't disagree with you. I think the Saudis are running this market down.
Yeah, they've done it before, and even if OPEC will say, the Saudis just keep the spigot open, and they're fine losing money I think they can lose money as much as they want right now. Because if you kill off U.S. production, it helps them in the long run.
I can't disagree with that theory. Well, any other? Obviously, that's a major play on your part. Any natural gas plays associated with that, or?
I'm still kind of looking into maybe building a position in Chesapeake Energy.
What is Chesapeake? I haven't even looked at Chesapeake in quite a while.
I have to pull it up on my phone because if I try to do anything on my computer, it's going to make my feed.
That's okay. That's okay. I'll pull it up as we speak. But go ahead. What's your theory on Chesapeake? Well, they got rid of Audrey. So.
Yeah, they did. I still think that they're a really well-run company. I think that in the natural gas and oil space, I think they know what they're doing the best, and I think they have the best traders.
They do have a great house of traders.
I like EOG for like the Balkan shale, and I think EOG is a great company. Anytime EOG gets below 90, I'm adding little positions to our already overall position in it. The same thing I feel about Exxon, but I really want a U.S. company to stand up and say, I know we might get hurt on the bonds, I know we might get hurt, we might have to cut our dividend, but we're going to keep going to the Balkans. We believe in American independence in oil, and that's what we're going to do. I think if Exxon or ConocoPhillips, which is another company I'm looking at, I think if one of them said it and stood by it, they would get a giant stock rally. But if we're going to do this whole thing of, we'll let OPEC and the Russians or whoever want to drive down oil, and then we'll stop drilling for it in America, and then oil will shoot back up to 140, and then we'll start drilling for it again, and then we'll bring a lot online, and then they'll knock it down again, and we'll stop. What the? That's not a business plan. That's just being stupid.
Well, but wait a second. I've looked at a bunch of balance sheets of various oil and gas producers, or planning to be oil and gas producers, they're heavily leveraged.
Well, yeah. I mean, they all have to be kind of pretty leveraged. The only three that are really not levered would be ConocoPhillips, ExxonMobil's really, really not levered, and Chevron. BP's pretty, the big four are not super levered.
Do you have a female in the background there?
No, I do have my phone goes off and makes noise.
But it's entertaining. Anyway.
Hey.
Well, okay. Other than oil and natural gas, which I like that long. I mean, honestly, ExxonMobil, I keep buying under 90.
Yeah.
I wanted it at 88, 88.50, but I don't want it at 91. I don't want it at 90.
Let's see, what else am I looking at? I've been saying that I've been making a Starbucks play for a while. I'm along the
Starbucks.
Yeah.
How are they gonna pay for the coffee?
Well, $3 milk, bro. I mean, $3 milk. They're gonna make a windfall if milk really does go to $3. I think they're gonna make a windfall because they're not gonna change their prices to reflect the $3 milk price that they're making money on.
Interesting theory. It's been kind of sitting here. I had a short on at 80, I think, back in November.
Well, I just
backed off it.
I bought at the beginning of this month. I bought the 80, 85 call spread, and I've been kind of winning on that. I guess my I have two spec plays. One's a biotech company that for certain reasons I can't mention on the air right now.
Wow, that sounds sexy.
I know.
Can you tell me later?
Oh yeah. I think I sent you an email on it.
Oh, you did. That's right.
I should be able to talk about it at the end of the month. But also, I'm long a lot of WWE calls at $11, $12.
WWE, you love this issue.
I do. I'm long the 11s. I'm taking a huge bath now, but we're on the road to WrestleMania, and I think.
Are you still a subscriber?
Oh yeah. I pay my $9 a month. I love it. It's
what, $9 a month? That's unbelievable, Muck.
Hey, but if you think one pay-per-view is $56,
right?
WrestleMania is $70 for HD, and you get that all for $9.
Wow.
I mean, you save money right there. But I'm just saying. I think by July, I think in the next 3 months you're gonna see WWE at $15 a share.
$15. Well, I think it's a good value play. I don't have any money in it at all, but I am playing so close to the vest right now that I trust nothing.
I mean, I'm getting slaughtered in it. I'm also getting slaughtered in my oil drillers. Getting murdered in those right now.
What do you think about the gold miners?
I don't know. Every time I try,
hot, aren't they?
Yeah, but every time I try to get a reading on gold, I just don't know. And I would love the miners if they were really connected to gold, but they're not. They're connected to land value. They're connected to the other shit that they mine with the gold. And they're connected to labor costs. They're connected to environmental regulations and shit like that. If we went back into the old timey, like the gold miners were only connected to the price of gold, then yeah. But I figure at this point, if I want to own gold, I hate to say it, but Jim Cramer's right. I might as well just either own the GLD or go out and buy options on the future.
Huh. Well, gold, and I even looked at it recently today, but it was booming pre-market. I know it was getting close to 1,300 again. And again, my target on gold was 1328, I think. But I'm not playing it.
Yeah, it's like
No faith.
I don't know. I mean, I guess my overall opinion is I look at bond yields every day. Every day I look at bond yields because a lot of my family is very conservative and they want to put you get a 10-year at 1.8. You get Spanish 10-year debt is at 1.5.
May as well burn your money.
Yeah, Spanish debt is nothing. I mean, people in Germany right now are paying the German National Bank to hold their money and lose money on it. There's no the only attractive yield I found is in Brazil, and it's 12 and a, like 10 11 12.5% yield. But do I really want to put my money in Brazil? I don't think so.
Government bonds?
Yeah, on their 10-year bond.
Is that right? I didn't know that.
But I mean, essentially, you're telling me that Brazil's yield should be better than Spain's? When I say, in my opinion, that Spain and Brazil are equal?
Well, I'm heading to Spain in March, so it's certain to go up. Barca and Madrid.
But the global search for yield, it's almost, I don't know. Even if we raise rates in the U.S., is it really going? I mean, I don't see. It's not going to make the 10-year investable to me. I mean, to 2-year flipper and those guys, yeah, it's investable, but they're also in the future and they're in and out. They're not,
They're trading it. They're just trading.
Yeah, they're not putting money in, and needing to live off the yield on it, on the income. But there is no income on it. I don't. Even corporate bond, I was looking, it's not the best source, but I was just perusing TD Ameritrade's bond department, and a 10-year A-rated corporate bond is yielding at the top end 3.5%. For an A-rated bond, 3.5% is not. That's not AAA. That's not implicitly backed by the government. That's just saying an average better than average company is A rated. I don't even know what should junk be. Junk be what, 6%, 6.5%? That doesn't sound right. I'm used to junk being 8. 10,
well, junk was jumping 2 weeks ago. I haven't really looked at it this week. I haven't looked at it over the weekend, but junk was moving forward. But
if the prices move higher, the yield moves lower. So
right.
I mean, and so I come to this point of if I can't chase yield because the yield I gotta chase is super risky, and even on the super risky yield, I'm not getting paid for it, then it drives me to buy more equities. And if I'm buying more equities, then I think more people like me would be buying more dividend utilities and stuff like that, and that's going to make those go up and make their yield come down. I mean,
I saw DAX made highs today.
Yeah,
all-time highs.
Something needs to go on because these yields or unless we're just going to live in a zero interest environment for the next 4 decades, then okay, cool, that's the game that we're playing in. But if you're really telling me that interest, I don't know. It doesn't seem to make sense where the yields are. And Left Hash and all these guys who do the bonds, I would love to hear your opinion. Let's not be silent. Tell me, who doesn't deal in fixed income, why these interest rates should be so low and why people are buying them. But I don't think it's feasible for you to put your money to work on a 5-year or 10-year bond and get less than 2% on it. I think you're losing to inflation. You're losing to real inflation. You're just losing.
Well, don't the equities have to stop here soon?
Well, but if the equities stop, then where's the money going to go? The money can't go. I don't think the money can go into fixed income. It certainly can't go into Forex. It could go into commodities. It has to go somewhere. And for all the talking heads on CNBC and Bloomberg that keep saying the money's on the sidelines, where are they putting that money that's on the sidelines? I don't think that there's that much money on the sidelines. I
There's
think
no
it's
money on the sidelines. It's a bunch of bullshit.
yeah. I mean, unless we get like another giant super cycle of rotation, I don't know. Like I scratch my head. I debate this all night with Greg. I debate it with KRS about where is this money? Where
Yeah,
can it
you
go?
know, KRS still blocks me. The only person that blocks me on Twitter,
Well,
and
I don't
and,
know.
and only because I came to somebody else's defense. I tried to mitigate it, or to deal with the situation, and he blocked me.
I would love to get Raven Trader on here. He knows more about fixed incomes than I do, but he's kind of, has he disappeared a little bit? I don't know if he's following me anymore.
No,
But
he's still around. He unfollowed most people, me included, and but he hangs around. I see him come up on my stream every once in a while.
well, if you could send him a tweet and be like, I mean, I have questions, and he has more knowledge on a lot of stuff than I do, but I don't. I feel like I'm leaving the people with a lot of questions. I don't have the answers to. I'm working on them.
Is that a Bears jersey you're wearing?
It's a Bears Jimmy Clausen's jersey. So
Yeah.
yes, it is. But it's a Jimmy Clausen jersey because he's the future.
Really? You think?
I don't know. I like Jay Cutler too. That's gonna get me a lot of shit on Twitter.
Yeah. Well,
I like to cut.
I like the fact that you live in Orange County, California, and wear Chicago garb.
I do. I like it. I have a Cubs jersey on. I also wear Man United stuff too. So
What?
and I wear
What?
Notre Dame stuff. So
Notre Dame stuff. Oh my
uh,
God. Oh no. First off, bud, I got to tell you something. I'm a South Side Irishman. I grew up. You lived and died Notre Dame. I remember my aunt telling me, "Oh, the field there is unbelievable." She wanted to roll around in it. But let me tell you, ND is a shitbag.
wow. I don't know. I just got my nice Brady Quinn green and gold jersey. I'm stoked about it. I think we're getting rid of Everett
Don't you
Golson.
buy that on eBay for $5?
$10.
All right, let's go back to equities.
Yeah.
I got a couple of questions for you here, Muck. Let me just check out I am printing money with these utility stocks. I mean, Consolidated Edison, which is the utility that
Yeah.
generates electricity in New York. I mean, my God, I think I have about a 4-month holding pattern on this thing, and I am up. My
Danger zone.
It's just crazy how much I'm up.
Well, yeah.
All-time highs.
Well, yeah, because I mean, essentially, um, like I said, once again, there's nowhere else to put your money.
Yeah.
Where else are you gonna where are you gonna put your money that you need? Where are you gonna put your fixed income money that you need yield and return on? Like you need income stream. You have to put it there. I put some money with Seadrill, and I put some money with Rig. Rig hasn't cut their dividend yet. Seadrill cut their dividend, which I'm fine with. Yeah, the stock took a crapper. We bought it at 11. It's 9. It's not a big deal. I'll buy the fucker all the way down to 5. And
Really?
if it gets below 5, I will launch some activist investors and I'll try to buy the company myself. I know shit about oil. I know shit about oil and how to drill it out of the ground. But I know they have a good company, and I know they have a great, stuff to come. Yeah, the price of oil has caught everyone off guard, and yeah, they have some, they do. They're very levered to price of oil, and they have some debt, but they don't have like super senior debt. They have multiple companies that own debt for different things. I'm kind of fine with it. I'm fine with Rig too, and I'm fine with Diamond Offshore. If you want to knock those down, I'll probably buy them from you. That's fine. if Rig cuts its dividend and tells me it wants to go buy Diamond Offshore, like not going to pay a dividend anymore, but it's going to buy Diamond Offshore and combine and make the largest land sea driller in the world, awesome. You know, if you cut your dividend and then use that to pay down loans, I'm not happy about it. But if you're going to cut your dividend and say, well, we're going to cut the dividend and we're going to go try to buy other companies to give us a better position when oil goes back up to $80, $90, awesome. I'm fine with that. Like, I don't need a dividend if you're going to expand. But if you're going to cut your dividend to pay down debt, that's annoying.
Well, it's annoying, but it used to be prudent back when I looked at businesses. But at zero interest rates, it's not necessarily prudent.
Yeah. So, but like I said, the drillers used to be a great way to lock in some dividend. The pipelines are still a great dividend income churner. They're not the energy pipelines like Energy Transfer Partners and stuff like that, the MLPs. Now they're not going to move as much on the upward side as utilities. Utilities have had a great run. But they're the only safe places to put your money. I mean, look at the giant. I mean, Johnson & Johnson's had a pretty good run. Don't tell me it's because Johnson & Johnson all of a sudden found the key to success. I think it's because their dividend's so good and people need that dividend, and they're buying that company. It's going through the roof.
I think that's very well said. Very well said, Muck.
Also, I mean, we do own a good amount of DuPont. I don't.
You're not betting on Foxcatcher though.
I do. I want to see the movie. It looks really, really good.
I heard it's excellent.
But I'm not. I don't think I'm gonna bet on Nelson Peltz. I don't know. I think a lot of the guys who want to be activist investors, I don't know what he's talking about. DuPont was at 35, and now it's like 75, and you're bitching that they're not unlocking enough value. Like, they're already spinning off their paint divisions and their low margin divisions into another company that we're all going to get shares in, which essentially is just going to be a giant dividend producer.
Right.
And they're moving the DuPont into like high growth, high margin areas, and it's probably not going to have a dividend. What more do you want? How do you want them to unlock more value? It's the same shit with the Coca-Cola fight. Like, why? If the stock's up 60% in 3 years, I think they're doing their job.
Yeah, I can't disagree with you.
I don't know. I just feel like these, like Icon and all of them, and Peltz, and they lived through their heyday in the 80s, and now they're like, they want the returns that they got in the 80s. Well, you can't really corporate rate someone with a ZERP environment, a zero interest rate environment, because they can raise as much capital as you can.
Well, Jimmy Chanos is making some big, huge tin, right?
Yeah,
especially with China markets. We're down what, almost 8% on Sunday night.
Yeah.
You think he cashed in some?
But that's the problem with these guys. Like, when they start doing something, they move markets. Yeah. And I don't know if it's their arrogance or if they're just so old or they don't realize how big they've gotten that when they say shit, it really affects it. I mean, let's look at look at throughout history. Long-term capital got screwed because someone decided to open their mouth and doubt the validity of Russian bonds and Russian currency trade. Yes, George Soros is one of the greatest investors of all time. But he should have known that when he says, I don't know, I kind of think Russian currency and bonds are kind of shaky, that now you just made them shaky. Do none of these guys realize that what they say, even if it's not true, makes it true?
Well, I can't disagree with you there. I think the markets are sitting on a razor's edge. I mean, that's just my impression.
Yeah. No, I agree. I would, at any given day I wake up in the morning, I would not be shocked to see us up or down, 2 or 3%.
Exactly.
In any given month, I would not be surprised if we're up 5 down 5, up 15, down 15. Uh, you know, the volatility has come back, and I love it. It's actually become a stock picker's market, but I know we say this all the time.
I'm playing vol.
Vol is a good play to do. Everything's so interconnected now that no matter what you're trading vol.
Yep.
You can trade VIX contracts and be like, I'm trading vol, and then be like, but I'm not trading vol in my DuPont. No, man, you're trading vol across the board.
Across the board. I absolutely agree with you. I have been long. I mean, it was tremendously long VIX. Sold most of it off. I'm down to like a knucklehead share at this point. Was looking to add today, didn't add, but I just wait. Patience pays.
Patience does pay. I mean, I'm not gonna say it, but if you bought, you can now. It seems like if you find the right stock, do the right research, buy and hold works for you.
You think?
I mean,
some of these companies aren't going away. They're not going away.
DuPont's not going away. Yeah, certain companies aren't going away. So if you buy them low, or if you buy them to where you think I'm fine buying this, just reinvest that dividend. Buy if it gets near that low again, buy more. Do that shit and just let it ride. I mean, just look at Pepsi, Coke, Johnson Johnson, and DuPont.
Exxon Mobil.
Yeah, companies like that. Look at where their highs are. Look at where their lows are. It generally kind of goes. It's a very peak valley thing, but they grind, and they don't just grind for a month. They grind for years. Either you're gonna get it on the downside, or you're gonna get it on the upside. And if you're getting on the downside, and as long as you if you're fine buying more, maybe every 5 points it drops. Eventually on the upside, you're gonna, if you reinvest it and just keep going with it.
Well, yeah, I mean Exxon has money to pay dividends forever. I mean, it's a whole culture at Exxon.
They all pay you money to wait.
Yep.
And I don't know, depending on what your age range is and what your risk tolerance is, trading's not for everybody.
Are you telling me I'm old? Is that what you're saying, Muck? Are you telling me I'm old?
I don't know. I mean, you were alive when the Four Horsemen were still playing at Notre Dame, weren't you? I'm not saying that you're old, but you were in that locker room when Newt Rockne gave his famous speech, right?
I think I was. Wasn't Ronald Reagan the Gipper?
I think he was, wasn't he?
I think he played the Gipper in the movie. Yes. Well, anything else you want to add today, Muck? It was, by the way, great show. I thought you had some fantastic insights. Anything else you want to add?
No, we'll try to do it tomorrow. And if anybody out there wants to come on and talk with us, just DM Bob, send Bob a tweet. That's IUU Bob. And this is open to anybody, shy girl, whoever wants to come on and talk with me. I'm tired of just spouting off my own bullshit. Well, I like to bring more people in, and maybe get a plethora of ideas,
or at least a little argument. I mean,
yeah,
I thought you had some great thoughts today, Muck. So everybody, thanks for joining us. Millions of viewers, it's unbelievable. I'm looking at the listings. We have 1.5 million viewers right now. Woo! Unbelievable. All right, thanks again, Muck on the Markets. Back tomorrow.